Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be taking a look at the IWM, which is the iShares Russell 2000 ETF. And we're going to be looking at a couple of options. One which suggests that the market may well have bottomed. One which suggests it may go lower. Now, I know I promised some of my patrons I'd be looking at oil this week, WTI. I've run into a few issues with the count and would like the opportunity to gather up some ideas. So what I think I'm going to do is I'll spend an hour during the live stream this week and we'll look at oil for a little while. I'll share with you the ideas I've got and we'll see what kind of conclusions we can draw with our members. Now, if you're on YouTube, I know it's been a long time since I covered oil. It's not the most popular asset on YouTube, but I know some of you are followers of oil. I will get something out hopefully next week once I've got a solid idea of what I'm looking at. Okay, but in the meantime we've got the IWM to cover today. I also want to look at the stock markets. I want to look at the SPY and the Nasdaq this week, and of course I need to also have another update on Bitcoin as things continue to, well, remain in a state of flux, let's put it like that. So here on the IWN, let's begin. This is my count, my primary count at the moment. Okay, now this calls for the idea that whatever correction we're in, it's complete. Now, like I said, there is an option to go lower, but this counts out relatively nicely at the moment. And it's the idea of a expanding flat. Okay, all of this gumph up here was just a flat here. Okay, into this B, expansive B, into 5 waves down. Now, I was expecting the fifth here, after this move here, I was expecting this to unravel and head down a lot lower, but it seems to have bounced impulsively. Now, it could be that the 4's not done, right? It could be that we're going bum bum bum, dun dun dun, dun dun dun, dun dun dun, some kind of triangle, or whatever. Or but we know we can't come back above the level we've got here because this is the invalidation point for the 1, because I think we've got a flat here. Now we'll come in and zoom in and have a look at this so I can show you what I'm going on about. So, right, 5 waves down into a 1. A, expansive B, expansive C, flat pattern. So the 1's here, not here. 1, 2, 3, 4, 5 down into a 3. Now it's not the longest of 3s, doesn't hit the 1618, but it does come to the 123.6 to the tick, so it is longer than the 1. We then get 3 waves into a 4, which does not overlap the 1, and then we get this rather funky thing. Doesn't look like a clear impulse down into a 5. So that leads me to believe that either the 4's not in yet and the 5 is going to come lower. Okay, or the 5's done with a slightly lower low. Seems a little rushed, but it's still, as a structure, it's not that unpleasing to the eye. Okay, if we were to just pick it up and move it to one side, it's a believable impulse. Now something like that, with a longer 4 going on maybe into a triangle or something, that would be a little bit, that would be an even more believable impulse, right? So it's not perfect, but it's passable. So really simply, let's just bring up our levels folder here. We've got a bunch of levels to look at. 188. Okay, break this, and we are heading lower. And that 5th's not in yet. Right, we're likely going to have to see some more corrective activity to establish the 4. Break above the wave 4 invalidation point at 212.70, right, which is the 1 here, and it's likely we've completed down here. Now, it could be part of a larger correction. We will talk about that in a moment. But if we come out of here impulsively, 5 rather than 3, okay, then we'll be looking for a 3-wave move back and then for it to continue. Right, so we're stuck in this range at the moment. I'll lean, for the meantime, while the low holds at 188, I'll lean that we've bottomed here with a rather stubby short 5th. Now I didn't want to do that because I was expecting this to occur, but we had a really convincing bounce. So let's just have a look at some more classic TA for a moment, see what we can pick out here. Let's bring up our moving averages, day time frame. So we've had I must have noted this on the chart. Yep, we've had a death cross. Now, I always say this. Death cross is synonymous with finding a low shortly afterwards. So here's the death cross here, and here's the low shortly afterwards. Right, a few days later. Now, it's not a confirmation of a bottom, but it is often synonymous with a low. Now, how long that low lasts for, or if it's the low, that's all up for debate. We've seen this multiple times across multiple markets. If you've been watching my YouTube channel, you would have seen me talk about it in Bitcoin on several occasions. And the death cross we had in Bitcoin was synonymous with the one-to-one we had in the correction, the parallel channel, all the confluence I pointed out in that video, which suggested that a low was in. Right, and then we had a really significant bounce. So, is that on the cards now for the IWM? We've had the death cross, we've had a low roughly a week later, maybe less than that actually, and then now we're going to come out of here aggressively. That would make life much simpler. Turn this thing around, get back above all this noise, and that's really the key here. All of this is going to be some pretty serious resistance. Should be some very serious resistance, because we were wicking and bodying candles into this range for a long time. So getting back through this aggressively and backtesting this, that would be the perfect launch pad to go higher. But this is also the perfect place to get rejected. Okay. Now, let's just... one of the things I don't find particularly convincing, let's cover that. So if this is a 1 into a 2, and I struggle to make this the high because I can't get a 5-wave structure in here. It's a 3-wave structure. I can't get a diagonal in here that measures correctly. It's just a fucking mess, and I can't conclude the count at the dominant high. I've tried and I just can't get it to work. So this looks better. 3-wave structure. One of the issues I have with it, however, is how small it is. It's big in time. Now, caveat for what I just said about how small it is. I am very fond of saying, what you don't correct in price, you correct in time. You've probably heard me say that before. Now, as a wave 2 target, we don't even come to the 50% retrace. Okay, we don't come to the golden ratio anywhere near it. We stop, let's switch over to a wave 4 here, we stop between the 23.6 and the 38.2, which is pretty shallow. But given the length of time that this thing's been correcting, which is 351 days to complete a primary degree correction, that's pretty significant given the time it took to get up here. Okay, so maybe we've just corrected in time what we could have corrected much more violently in price over a shorter period of time. Now, it doesn't mean we're done, but shallow corrections for 2s are more common, probably more common than they should be, if that makes any sense. But you know, observing price data over the last 12 years of this bull market in the US indices, you see lots of shallow waves, lots of strength coming in into the dips. And on that note, let's take a look at the volume. So, some pretty badass volume we've had here in the selling. Higher than what even we had during March 2020. So pretty significant readings here. However, it does not coincide with the recent low. Coincides with the prior low. Wave 1, Wave 2, Wave 3, highest volume, Wave 4, Wave 5. Weak volume. So there should be divergence here in momentum indicators, right? So let's check that out. Sure enough, there is. Between the recent lows, our proposed 3 and 5, see it on the MACD, see it on the RSI. Rising lows. Going back even further on the RSI, we've got longer term bullish divergence. It's not the strongest, definitely stronger over a shorter period of time though, between these two lows. Okay, so volume coming in on the 3rd wave down, volume slackening off on the 5th wave, which turns out to be very short, and off the back of bullish divergence then we have a pop. So all of that does feel like a low. Now it could still break down like I said, but it feels like a low. And that's really the best I can offer you guys at the moment. Let's just turn those off and let's come in and have a look. Now I've got these other supports down here, which is massive structural support from previous double top in the market. We've got a gap down here, and we've got the point of control down here, and we've got the 61.8 down here as well. So we've got loads of support way down here, but whether or not we actually get there, that's up for debate. Whether or not we need to get there. Freaks me out a little bit that we kind of stopped in thin air though. Let me show you what I mean. Let's just bring up the VPVR. Now we've put in some market acceptance, some trading going on here, right? And that's this recent activity, but there was nothing. This is all empty space once we fell into it. You know, and until we get lower, we don't really pick up any real market acceptance going on. So we're kind of levitating, just kind of levitating in the middle here at the minute. If we can reverse from here, build the base and reverse from here and get back above all of that previous noise, then that's a very positive sign for the bulls. But while we're hanging around here, it's a little dodgy. Like I said, we could be maybe working on a longer 4 and then have that 5th down, get to some significant support level. So I'm not sold that this is complete yet, but it is still my primary for the moment. So I think I've covered everything I want to cover there. So let's look at the alternative. I did DZZ into intermediate Y. So here's an alternate idea. All of that's still the same, except it's WX rather than AB. So rather than trying to get 5 in here, we get extend the zigzag. We get a zigzag in here, right? But it's not a single zigzag, it's 2 zigzags. It's a double zigzag in a Y wave. Now, that's fine. And this here is going to be a flat. A, B comes back beyond where the A began, and then we're going to get 5 into the X. Okay. And then we'll come down here. So this could be very deceptive, because the 5 could look like a 1, or it could be a C, keeping us guessing. So we want to watch momentum through this move. We want to watch the wave extensions. If once we've got a 1 and a 2, what does our 3 look like? We want to look at the volume, if it's coming in on the bullish side and supporting this move. If this is an overall correction of 3 waves, then the whole thing should look like declining volume during it. Now we've got the peak here, the low, so that could be the C in this case rather than the 3. All of this now should continue to decline as we put in the X. Even as we rally, I would expect it to overall continue to weaken. Momentum should really not pick up too much here either, so the C would likely not result in a thrust up into overbought. However, the beginning of an impulse in here might appear stronger. At the end of the day though, this will be the invalidation point, because if we come up in what looks like 5 and it's a C, we will come back below this level. If we come up in what looks like 5, the same again, but we don't go through that level, then it's a 1 into a 2. So what you're going to be looking for, if you want to get long at the end of the day, is the same 5-way structure coming up here. Wherever it gets to, we have no idea. You're then going to be looking for a 3-wave pullback, okay, to maybe the 50 of the golden ratio, and then you can set up an entry for a long position there. 5 ways up, 3 ways back, golden corner, or 50, and off you go. Downwards, basically thinking about the same thing. You want to see a completed 3-way structure, then you want to see a move down and a move back. You know, the reverse of what we're talking about if you want to be bullish. But confirmation wise, you're not going to get it until this level is breached, or we see something like that, because that's 1, 2, 3. So I would argue that I'm going to stay on the side for the meantime of a completed correction, and if I see a move back above the wave 4 invalidation point in what looks like 5 waves, I'll give it the benefit of the doubt of being bullish for the meantime. And that's the best I can do. Alright then guys, thank you for joining me on this technical analysis of the IWM. I don't think there's anything else to talk about at the moment. We'll just bring up those levels clearly again, and I think it was in the wave 2 count. Yes, let's get rid of that. So this is the primary. The volume explains the wave 3. The slacking off of the volume explains 4 and 5. A move back above the wave 4 invalidation point in an impulsive manner strengthens the likelihood of this being a low. We cannot have confirmation that this was the low, right? Or well, I should explain it in reverse really. We can't have confirmation of the alternative count unless this low breaks. We'll come up in a flat and then we'll break down in another zigzag. But there will be opportunities both ways to set up a trade. Something I've been stressing lately on the Patreon, trying to make the point, because it's not just on amongst members, new and old, it's also across YouTube in general, which is I'll occasionally get comments of just how confusing Elliott wave is. And yes, it can be confusing. And how can you make your mind up and how can you make a trade with this? You've got to, in my opinion, separate your Elliott wave analysis, long term, short term, intermediate term, from how you enter trades. Right? We want to use it as a tool in the toolbox. Okay, but how we look for a trade isn't necessarily based on the conviction or lack of we may have in any independent Elliott wave count. We look for the setups that give us the highest probability. 5 up, 3 back. We have a bullish count in support. We have a long-term count which supports it. If you see a 1 and a potential 2, you've got the opportunity to enter a 50 or golden corner as an example here. Bing, off you go into a 3. Now at that point you can either take what I teach as the STS, which is a safer way to option to limit your risk, safer option to limit your risk, your exposure, or you can just use an arbitrary stop, or you can use a structural stop, which is going to be too far away in that case for me at least. But either way, you can't, well you can do whatever you like, it's up to you, but the point I'm trying to make is you're going to end up in situations where you don't know what's going on. And at that point, the easiest choice is to not trade the thing that's confusing you and go off and trade something else that isn't. Now, if you do choose to trade the thing that's confusing you, you're still obligated to find the best possible setup. That's all I'm going to say. I'll leave it there. Alright, so before I go, if you're new to the channel, you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And if you're interested in signing up to the Patreon, it is the start of the month. It's the perfect time to do it to get a full month's value. There's a link in the description box below. Head over to the Patreon, have a read of the tiers, see if there's anything that interests you, and feel free to sign up now. Also, if you're not following us on Twitter yet, there's a link to my Twitter feed as well. I always post when I've uploaded a new video to YouTube. Alright guys, take care and I'll be back with you shortly. All the best, bye bye.